Hello, today is Tuesday and it is the 5th of June 2012. Before we go over the daily chart of silver and the 10-year Greece note chart, I want to talk about preparation for unlikely events. Therefore, in the unlikely event that we occur that of a sunset tonight or some other night, the most likely scenario is that the light that we are so used to seeing from the sun will dissipate. And yes, the moon may help out, but it also may not. You want to prepare for ways of, well, getting light, flashlights, electricity, matches, lighters, candles, figuring out how to start campfires, different ways that you can be able to see without that of the regular light. And in a situation, the unlikely situation that we have a legal tender devaluation, legal tender collapse, that means you're going to have to find other things that can be used that you used to be used to stating within your legal tenders. Gold, silver, food, and anything that has got physical value. Let's get on within today's chart, which is also charted in legal tender. So when you see these numbers, that's how many legal tenders of the U.S. side that you're going to need. It's not often that you hear people refer to it as legal tenders. For example, you don't hear people stating, yeah, I got to go to the bank, I need some legal tenders, and instead of using the word money. And that's interesting if you look at different phrases and sentences that occur with the word money. If you change it to legal tender or legal tenders for the plural form, it's a little interesting. So within this chart, it's obviously been coming from a downtrend, and I've been talking about the descending triangle in a few appearances lately with silver, and now we have the ascending one, where you have a resistance field of about 28 and 3/4, and you're starting to develop that of an uptrend line. If you read what ascending triangles are as far as its bullish or bearishness, you may see that it is that of a bullish pattern. However, I think it would be more bullish in an uptrend than it would be in that of a downtrend. No guarantees that it's going to go to one side or another, but that's why it's just really important to track the break of this resistance, the rate of the ascent that we've been seeing over the last 3 weeks or so, and also being aware that it's not uncommon for the first break to be that of the failed move, meaning you have a little break above here. That's right off the bat a little warning signs that it just may end up going lower. And on the same scenario, that if you say break down below this low in here down to below 27, well, that might be that fake that it's going to go higher. And you never know. That's why I always want to adjust to what the message of the market is stating. Now, this 18-period average, which is front-weighted, and for the last, also for the last 2-3 weeks or so, it's been consolidating within it, and now it's starting to go sideways. And even the 18-period average of lows is barely rising right now. Therefore, it's only had a short period of time in this downtrend where this is to be the case, but it's really just one of those next key steps, because the step after having it flatten out is to be able to break out above it, have this thing start to rise higher in some sort of manner. And what's nice is either to have a move back to that average again where it can consolidate again and then break whatever resistance it establishes. So say it goes up to 29.12 or something, and then that's going to help make the moving averages start to go higher. And then if it retraces back and finds support within the band and then breaks through that high, those are the types of patterns you're looking for market changeovers, basically. Now, as within this 18 average, I've done some calculations by determining the rate of ascent or descent. And let's just go through them right now. This it's like a little histogram kind of chart, but basically the way this is calculated is it takes the average of the 18 highs, lows, and closes, and it combines them. And it shows if it's in a downtrend or an uptrend and to what degree. And we can see that it's now for 2 days been barely in an uptrend, but really for 3 days it has been flat. The 18 average of closes, it's been 3 days ago. It went higher. Yesterday it was exactly flat, and today it's back to where it is, but pretty much flat for 3 days. 18 average of lows, however, is starting to break out. That's because of the ascending triangle. Making the higher lows will do that. And then the 18 average of highs has been flat for a few days, but it's still barely declining because it's barely been making that of lower lows. So still the key thing, the 30 is going to be important. In fact, on a breakout, that would be the next area that I'd be focusing out on when it does get above that level. Now, as far as Greece is concerned, about a month back, I showed this chart, which is the 10-year note. This is just insane levels, basically, which is why I think it's important to watch, especially for that unlikely event of that legal tender devaluation and destruction. Well, basically what I stated is 2520 was the first significant Fibonacci level, with 3116 being the second. If this level is not that much resistance, watch for a fast break to the second level and then adjust the message of the market when it gets there. Well, let's now see what has happened since that time frame. And, well, it did have the fast move, and, well, now it's been stabilizing within that level, and quite frankly, you make these higher lows and you're now showing pattern or odds of which that it's ready to break through this level, which can oftentimes mean that the volatility is going to be massive. And sometimes people say that these technical indicators work because everybody sees them. Well, this is one of the few ones that people don't see, and that's exponential Fibonacci, as it takes the highest level and it divides the lowest level. So it basically gets the difference of the movement. In this case, it's over double. And then you put it to the power of either 38.2% for this one, 61.8% for this one and there. And you multiply whatever that answer is from the low, and that's where we get these levels. And it will always do 38.2% of the difference from here and 38.2% of the difference from here to here. But again, it's interesting to note that this thing was just flying high, and then boom, this level just collapsed, which a lot of it is government intervention that would do such a thing. And based on Fibonacci analysis is that when you have a move from point A to point B and it breaks and holds and stays above the second significant level, then that makes it that of a failed move. And when you look at this on a more longer-term perspective, which we are going to be focusing on right now, this is the candlestick chart, and obviously the original part of the breakout was really in here, and things really started to get going in here. What I find interesting is the trend line analysis tool. You have this downtrend line, and it obviously broke, which created this uptrend line. And before it got going, just before it got going, it had that failed breakdown, which resulted in what has been an exuberant uptrend that still hasn't been broken yet. It's been many periods of holding this large rate of ascension. And I think it's important to know that as this breaks above this resistance and could very potentially continue momentum that it's been seeing preceding the correctionary phase, that could be the end of the euro. It's a possibility, but that's why it's important to focus in on what this particular chart is showing. Thank you for tuning in. And remember, prepare for the unlikely event of either or both the sunset and the legal tender collapse.